So is the market concerned with inflation, or is it concerned with recession in the US? And that's really the number one question a lot of people have been asking. And on days where the fight or the concern is with a recession, market tends to pull down or pull back very sharply. The inflation talk, well, markets don't like that either. But I think for the most part, we can make the argument that even though the expectation for inflation is to move higher because of tariffs, because of potential or possible tariffs, it seems to be hovering in and around that 2.5%, 3% range, and it's been there for quite some time. Whereas we're seeing a number of economic data showing a slowdown in the United States. Our first chart here, first illustration, shows exactly that, another indicator. This is called the Glassdoor Employee Confidence Index, and it just shows you that right now, the employees, they don't, they have a positive view of their employers, but the business outlook is definitely coming down. They're not as confident as they once were. As you can see, a pretty sharp decline in the outlook for business from an employee standpoint. Right now, our next chart shows the consumer sentiment, and it's interesting because it shows it by party line. You can see here when Trump took office the first time that the sentiment wasn't bad. Came down a little bit during the Biden years, and now most recently has come down even more during the recent Trump period. He's only been in power a couple of months, but you could see that sentiment has dropped. And again, the sentiment was quite high when he was elected in November of last year. Markets shot up significantly higher. But since then, all this talk about tariffs really has taken down the consumer sentiment. Our next chart here shows, as I indicated a few minutes ago, where we think inflation is going, inflation expectations of the U.S. consumer. You can see how it's trending significantly higher. And again, this is based on potential tariffs and what people think will happen to pricing of goods based on these tariffs that will come into play either April 2nd, or the tariffs that are already in place on aluminum and steel from Canada, the tariffs that are in place against Mexico and China, the 25% tariffs right across the board. So consumers right now are a little nervous. And you couple that with some weakening data in the jobs, monthly jobs creation has come down. Our next chart shows that. You can see that there it is, the last number, 150,000, well below what we saw at the end of last year. So the jobs coming down. Our next chart showing the Fed survey. We had a Fed survey done by CNBC, and that shows that they're expecting GDP to fall significantly from 2.5% down to under 1.8% or 1.7%. So again, another indicator about another indicator that the market and even the Fed starting to become more concerned with recession versus inflation. And our last chart here, it's probably a pretty good chart, says it all. OECD sees a weaker 2025 growth outlook for the world, and it compares what the December forecast is to what their latest forecast is. And obviously the gold is the December forecast, the blue is their latest. You can see how many times or in how many countries that the blue is below the gold, meaning expecting a downturn from what they were predicting at the end of last year. Canada is a big one. You could see that they were predicting much higher growth in Canada, and now they're expecting a lot less. And if you go down to the United States, it's also less, not as much. China, actually, they're expecting China to grow more than what they were predicting at the end of last year. So it's interesting when you talk about recession versus inflation. I think the talk is now turning over more to the recession side than the inflation side. And I think you could see perhaps the Fed maybe consider cutting interest rates a couple of times going forward. I know that's not the base case right now. We're going to see later on today, the Fed has a meeting and they're going to talk about their predictions, their dot plots as they call them, what they actually believe is their base case going forward. So in my opinion, I think right now investors are looking at the recession side more than the inflation side of things.